Welcome to Shortview Trading, your morning market hit for Wednesday, 25th of November. What matters today for traders? Well, the theme of the month continued yesterday, and rotation was very much the dominant theme of yesterday's trading session, as it has been throughout this month. And in particular, we saw the cyclical sectors leading the charge in the US. The Brent oil price was up 4%. The S&P 500 energy sector was up around 5%. Added to that, industrials, financials, materials all did well on the session. Indeed, that's very much the theme of this month. The performance of some of these sectors this month is really quite extraordinary. The Brent oil price is up 27%. The world energy sector in the world stock market's up 39%. Financials are up over 20% in November. Materials and industrials and consumer discretionary stocks also all doing very well. And with that, we've seen breakout to the upside in the cyclical index in Japan, the Nikkei 225. We've seen a breakout to the upside in the Australian ASX 200. And we've seen a breakout to the upside in the Russell 2000 US mid-caps. So the rotation theme is dominant. Risk appetite is high. And with that, of course, our daily models are pushing up towards high levels and generating lots of sell signals. We update and publish these every day in the Daily Rag, which is available to subscribers on the website. And in that publication, we update our 1 to 2 week views on equity market index futures, whether you should be long or short or standing back. But with those super strong moves higher in markets across the course of recent weeks, what we've seen is a building of exuberance in market prices. We touched on this in recent Daily Rags, and indeed you can see it in all sorts of models. If you look, for example, at the CBOE single stock call volume option model, as you can see from the chart in front of you now, that indicator is rallying towards record high levels that we saw in early June, just ahead of that early June pullback. Other signs of exuberance include the percentage of US stocks that are overbought. This model that we're putting up in front of you now looks across several hundred US stocks and measures how overbought each one is and aggregates that signal. And you'll see that it's back near the June highs, moving towards those levels. Added to which, Bitcoin was up once again yesterday, and our sell-off indicator, which is designed to warn of waves of risk aversion, when there's a heightened risk of a wave of risk aversion, is building towards its key plus 20 level. This indicator generates 1 or 2 signals a year, often pretty timely, and often just ahead of major pullbacks in equity markets. And of course, what it does is it measures exuberance across the full breadth of global financial markets and aggregates that message to generate the signal you see in front of you now. So we're not there yet, but we're close. It clocks up day by day. It's moving towards its plus 20 level, but not quite there yet. So with that backdrop, and to see how we're playing this market, please see today's Daily Rag, available to subscribers via the website. So what are we watching today? Well, plenty going on. The UK Chancellor's giving his spending review, although I don't think that'll be moving markets. It'll certainly be interesting. Over and above that, we've got the Fed minutes out later on today. They come out at London evening time. Added to that, in terms of key macro, we've got US personal income and spending for October. That's an important data point. We've got durable goods. That's also interesting. And we've got the second estimate of US Q3 GDP. So that's it from us. That's your morning market hit for Wednesday, 25th of November. Thank you for listening. Please do subscribe on YouTube. Simply search under Shortview Trading, or follow us on Twitter, LinkedIn, and or Facebook. Thank you for listening. Stay safe, trade well.